But for the moment, I need to just mark out Infosys, which exactly the numbers, again, I do a relative comparison, TCS versus Infosys. Infosys numbers were better, but sometimes you need to look at the outperformance also, and the recent outperformance in Infosys also has been quite stark in the run-up to the numbers. Jinesh Gopani joins us, head of equity with Axis Mutual Funds. Jinesh, in the morning we were chatting with some experts that what is the bad news in the world? And, we struggled to come up with 3 bad headlines. Then I asked, give me good news, and they gave me 10 headlines. But if I connect the mood and the news and the screen, somehow there is a big disconnect. The news is not bad, but the screen and the prices are looking terrible. How long this kind of a disconnect will continue? I always thought that markets would trade logical, but in this case, markets are just not reacting to good news.
Hi. So I think we should really see where we are and where we were. I think till the announcement of the corporate tax rate cut, there was sort of a gloom and doom for the economy. And hopefully with this announcement, the market reacted very positively. And I think, ultimately at the end of the day, it is numbers which decides the fate of the market. The near-term volatility due to positive or the negative news flows stays there for 1 or 2 days. So ultimately, unless and until the numbers really surprises us on the upside, it becomes very difficult for markets to just climb every day. So to that extent, I think we are in for a volatile session. Every day you have 1 or 2 positive or negative news across world, also in the domestic market. So to that extent, I think we are in a very tight range with very volatile nature of the market.
How does one deal with this kind of an environment?
No, I think there is no need to deal every day, frankly speaking. I think just stick to the numbers where you want to do investment. Just see to it that the fundamentals are strong of that company. And India being a bottom-up stock pickers market, if you really get into those 15-20 good names who are delivering even in this 5% GDP growth environment, and have been able to survive the bad phases of their own sector, I think that is where the flows would come as and when eventually the big flows starts coming from the FII side. So I think to that extent, just there is no need to do everything every day. It's better to be patient rather than reacting to the news flows. Just stick to the thesis or the philosophy what you have been doing in the investment side, and just see to it that you don't get into some of the stories which can end up losing your portfolio itself.
Viewers, they've started writing to me and they really are curious to understand that funds are underperforming the respective benchmarks. A lot of SIPs which are 3-year SIPs have become negative. So where essentially are returns headed?
I think, we should see in the context of how the economy has also behaved. After demonetization, we got a lot of flows. The large part of that flows went into mid-cap and the small-cap kind of schemes. If you really see, there was a hope that economy will revive at the end of the first term of the BJP government. And unfortunately, things as we see, the GDP growth has come off from 7.5% to 5% level, and the hope of let's say mid-cap and small-cap delivering higher growth rates has just come off. And given the state of affairs at this juncture, you have clearly seen there is a clear-cut demarcation between men versus boys. Also, many companies had taken undue risk in terms of growth, which is biting them now. So if you are in, as I said, if you have a philosophy of being into a quality stocks, who knows the business cycle well, have been able to navigate the bad phases of the market successfully, I think they would come out as a winner. If you really see in all the sectors, you will not get more than really 4 or 5 names to participate in your portfolio in a big way at this juncture. And this is because at 5% GDP growth, there is only a little bit where everyone can get the fair share of volume, and hence what happens, the leader or the efficient player can grab the market share much better way as compared to the others, and this is across sectors if you really see.
Jinesh, your top 3 holdings are Bajaj Finance, Kotak Mahindra Bank, TCS. There is a DMart in your portfolio and also Grove Finance. What is the idea here? Are you sticking to these A quality expensive stocks because that's where you see earnings visibility? And are you playing it safe right now? Or do you think, irrespective of where the economy is headed, your top 3-4 holdings, which could be called as expensive companies, they are unlikely to change? I'm just trying to understand your basic approach here.
See, I think you should not look at expensiveness just from the sake of valuation perspective. You should just see the business model. You should see the scalability of the business model. And as I said, how they have been able to navigate the bad phases of the market and still continuing to deliver numbers which are much better than the industry averages. So if you stick to those names who have been delivering, and this is what we have seen in last 2.5-3 years, that the quality portfolio has really paid off in terms of not only protecting the capital but protecting the returns itself. So to that extent, I think so long the company is delivering on earnings growth, the company is delivering on its ROE, what they have visioned or they have been able to guide to the market, I think that is where the flows go. And this is I have seen in my 17 years of experience. When I started my career, I was given a banking sector, and the first bank was one of the private sector banks, and at that time also it used to trade at 4x price to book, and now also it trades at 4x price to book. The only consistent part is the delivery of numbers. So I think don't look at expensiveness just because it is trading at such a high valuation. You should see it in remark to the how they have been able to deliver over a business model.
But you know it better than anyone else, and you certainly know it better than me, that value is what you get, price is what you pay. The ultimate return of a stock is a function of your entry level and at what price you're buying. So if you're buying stocks like Bajaj Finance or a DMart or a Kotak Mahindra Bank or HDFC Bank, which is what you own, you are pretty much buying them at levels at which some would say that, look, they are trading at historical highs. So I agree with you that they will grow. But how much of that news is factored in?
So I think if you really see in this world where technology disruption is at its peak, we are seeing the case where disproportionate profitability, disproportionate market share will be with the few guys. And as you have seen even in NBFC space, the tier 1 has been rock steady. They have been able to get capital well, they have been able to grow well. But if you really see tier 2, tier 3, tier 4 NBFCs will have to really maybe slow down their business model or change their business model in itself. So I think till the time you don't have more names really driving growth, really driving ROEs, I think this is the trend will continue. Obviously when macro improves, let's say once we go to 7-8% GDP growth, there will be more such good names which will come into play. And maybe that would be the time when to start reshuffling or change some portfolio strategies. But so long given this world, which is a very I would say difficult world in terms of doing businesses, growing businesses, and dislocating your own business model for future growth, I think it is like winner takes it all.
Okay, fair enough. So, you know, Jinesh, considering that you're fairly focused when it comes to some of those consumption stories, I don't see too much of any, cyclical counters in your overall portfolio as of now. When you're focusing so much on that, when do you actually see demand growth coming back? When do you see, a proper uptick being reflected also in earnings? What's your outlook on that front?
See, I think this corporate tax rate cut, which has been announced by the government, I think it could be a big game changer. Maybe now, maybe not now, but 2-3 years down the line. This should propel private capex if government walks the talk. This is the first announcement. They should further create an environment which is more in a form of red carpet and not red tapeism in terms of how they want to bring some of the large enterprises into India. So I think it could be a game changer over a period of time. If that really happens, then private capex will come into play in a big way, and that is where we feel that the cyclicals will really start showing growth in terms of their earnings momentum. So I think we are another maybe 12 months away. We'll have to really see how the large corporations globally think of India in terms of investment destination, how much money they are ready to pump in over next 3 to 5 years, and how government helps them out to set up businesses in India. So I think at that level, the cyclicals will become an important part of the portfolio. It is not like we don't have in our portfolio, but it is not a larger part of the portfolio as of now.
Jinesh, what do you see leading the recovery then? Do you see it being led by consumption? Do you see it being led by the economy? Where do you expect to see, those, signals that a recovery is coming through first?
See, I think if you really see India, we are a domestic consumption-driven economy. So unless and until the demand revives, others will take time. So I think consumption has to revive, maybe not now, maybe 6 months down the line. The rural, which has been under pressure for last 2 years, should see some signs of momentum once the money comes into the hands of the farmer, maybe around December or Jan onwards. The urban has been growing, but maybe low single digits. So unless and until the demand environment improves, the other things cannot improve, because we are a domestic consumption driven economy. So maybe some more stimulus for the short term might help demand revival. I don't know whether it will come or no, but the most important point is the demand revival, and demand revival can come only once you create an environment of job creation, job growth, and wage growth. So demand is very important.
There were high expectations, well not high, but there were expectations that festive season may actually kickstart things. Have you seen? Do you feel it's too early? What are your expectations, in terms of how we may see some of that reflected in the next quarterly results?
See, I think too early to say. I would say Diwali season would be critical. As of now, it has been okay, I would guess. Some consumer durables are doing well, whereas the high-end discretionary, as you see, the auto numbers and other numbers have been okay. So it's too early to say that the demand has revived, but at least what I would say that some improvement in sentiment is seen. Hopefully that should culminate into demand environment. I think the most important part is the rural revival. If rural India revives, then I think demand environment will change for good.
All right.